Good evening, everybody. Spring is not here yet. But getting closer. All right. A good strong day in the market. Is this a reversal signal? Well, there's still a few pieces of criteria that would make for a strong reversal signal that did not occur today. Number one, as we can see in the Dow, we closed right smack dab on the T-line. And so what's our basic concept or basic premise? We need to see a candlestick buy signal and a close above the T-line. And we're not there yet. Number two, stochastics are still heading in a downward direction. So we got to be careful that that we're not getting sucked in. It's not unusual to see a market pull back, then pop back up. But if they can't get back up above this level, it means they're failing and they'll roll it over again. So with that, if we analyze the S&P 500, let's make this a little bit bigger. The S&P 500 has a very good buy signal, an inverted hammer gap up. High probability that we should be moving up, except for the same criteria. We haven't closed above the T-line, and the stochastics were heading down. And the worst of all was the NASDAQ, that even though it traded higher today, it wasn't very decisive. They opened it, took it up, and came back down almost to where they opened it, which kind of conveys the impression that the bulls weren't real extravagantly strong once the market opened. So this still puts us a little warning again. Our stochastics heading in a downward direction kind of keeps us on alert that any buying at this point should be done on the basis that as soon as you see things turn around, you close out long positions that aren't confirming very quickly. Now, what the heck is this thing? Well, all right. So with that, let's take a look at some of the other indicators. Interest rates are just dead flat. 10-year note just moving sideways. Crude oil prices backing off, which can be looked at in one of two ways. That there's a bigger supply of crude oil out there, or somebody's anticipating that if there's another economic slowdown, that crude oil demand isn't going to be all that great. But as we can see, we've seen a kind of a hanging man, spinning top, gap down, and now we're down here. I guess I need to get these stochastics just a little bit higher up. Where's yeah, bad dag. Unfortunately, what the futures are telling us right now doesn't mean a hill of beans, because in whatever it is, 12 hours from now, there could be a completely different viewpoint. So, or a completely different outlook. Let's see. Gold started apparently backed off. Didn't seem like it backed off that much, but a lot of the gold and silver stocks were backing off today. Some with some significant sell signals. So we'll have to see what happens to those. What else? I've been trading some cotton here in the last few days, but closed it out yesterday because it was starting to whipsaw. Still think it's in an uptrend, but I'll buy it on the breakout. Actually moved over to coffee because I need to bring this chart back up again. Notice how one of the topics we're going to go into a little bit is how to get prepared to take profits, or how can we see a trend starting to roll over. And this had all the implications of that, where we started seeing indecisive trading, and then doji gap down, and then a close below the or gap down below the T line. So this up here, as we can see, is not very decisive trading, and it was rolling over. So right now I'm short coffee with the anticipation of it pulling back somewhere. Now there's gaps down here. So if I have a chart like this, we'll go off on a tangent here. I don't know where it's going to pull back to. It might just pull back to right here, or it could pull back right here. But there's lots of no man's land in here. This is where we throw the Fibonacci number on, the Fibonacci retracements, to give us some other points of targets. This is the 38, this is the 50, and this is about the 62%. So if it doesn't stop here, then we can watch for it to come here. Do we know that they're going to come back here? Have no idea where it's going to go to. But at least we know when we start saying buy signals, if they kind of correlate with one of these levels, that's probably where somebody's stepping in and starting to buy them. Yeah, I don't know. Does Joe, is that an ETF? Yeah, there you go on the on that one. But let's see. All right, so there's a. All right, what else we got? Gold, coffee. I have the first one I had up here. I've just been crying in my beer because I sold out. This is now May. I sold out somewhere. No, it was right down in here where I had a good profit already, and they've just taken it right up. This is a perfect illustration of do what the charts tell you, not what you think is the charts are going to tell you. And there was nothing in here yet to tell me it was time to get out. I just thought I'd be a little bit clever and let it bounce down to the T line and then jump back in. And they just jumped up limit after limit without me. Let's see, anything in the soybeans? Nothing here other than a short. And again, here's something where you throw Fibonacci numbers on. From the low point to the high point, it looks like they're trying to bounce off the 38% retracement level right now. So is that where they're going to reverse it? Well, it's starting to show indecisive trading, and that just adds another piece of evidence of why they might be reversing it right here. Okay, get rid of the Fibonacci's. Okay, let's see what else. Gold, silver, dollar. Dollar's still in a downtrend. The euro is still in an uptrend. And the Japanese yen is still sideways. So at least you can trade off of that combination. Silver's gotten flattened out here a little bit. Right now, I wouldn't know whether to go long or short silver. There's just no direction. And copper, you stay short until you see a buy signal. And again, this is where you kind of observe the obvious, which is they've been kind of in a steady downtrend here for a while. And sugar. This one's rolled over. This one can be shorted. Notice how they've already come back and filled this gap. They gap down. Let me make this bigger. This is why it's important to see a buy signal and a close above the T line. Once they rolled this over, I mean, they're now starting to slam it in that direction because they never brought it back up above the T line. Live cattle, I'm in live cattle right now. Because it's got this little kind of bottoming action. Notice it supported on the 20, kept closing right here at the T line. I'll stay long until I see it close back below the T line. Interest rates, well, that was the bond prices. Bond prices just flat. This is the 10-year Treasury notes. I think they're going nowhere. Probably waiting for all the moving averages to converge. Wheat. Whoops. Wheat has moved up nicely, but notice how it's getting a little bit toppy in here. Got a bearish Harami, which probably gives me the inclination they're going to bring them back. Now that they've broken out through the 200, they're going to probably come back and test it. When they go through a moving average, they'll usually come back and test it. And we can see what they do exactly at that moving average. There was a bullish Harami, which told us that this selling had stopped. And where was our next target? Up here at the 200-day moving average. Okay. Corn. K4. Well. Well, where the heck did corn go? What did I just do to get wheat? Ha! There's wheat, so corn should be there. All right. Corn doing the same thing. Notice the big fry pan bottom. Notice the dimple that started your uptrend. It's come back to test the 200. I'd wait for the next buy signal. It might ride the 200 here for a while until the stochastics get back down in the oversold area. Corn is grown in Iowa. All right, I want to go to Iowa just so I can see the field of dreams. Okay, I think we touched all the commodities that are of interest. All right, let's take a look at a few right now that, again, this is where you use the patterns to kind of set yourself up to be in the right place at the right time. Slow curve, this is OCLS. We started buying this yesterday because notice what we had here. An inverted hammer, slow curve, positive open, and where were we breaking out to? Above this level. Today, another big move. That was a big percentage move today. So we hang on to this until we see a sell signal. Somewhat along the same lines as AMRI. We recommended this the other day. There's your classic fry pan bottom breakout, invert or pullback, and notice how indecisive your pullback is. This is somebody was asking a question the other day. How do you know whether this is a reversal or a pullback? Because you can kind of see the nature of the trading days. They weren't hard selling days. These were hard buying days. These are indecisive selling days, which tells me there's probably another leg to the upside. No, I think I thought the Field of Dreams was in Iowa, wasn't it? Or at least in the movie it was. So again, the slow curve. Where's the optimal time to be buying? An open positive right here tells us that we're in wave 3. It could be a hanging man, but why do we buy this position here? Because if this was a J-hook pattern, which it looks like it is, that would mean wave 1 and wave 3 should be equivalent. So even though we've had a hanging man, stochastics are still heading up, just getting into the overbought area, not quite there, which tells us that might not be the top. But if I was going to take profits on this, if they traded it back below the low of today, that would tell me the hanging man is confirming. So you put your stop right here at today's low, which was 1787. All right, another one that we re-recommended is PEIX. There's your fry pan bottom. There's your kicker breakout. There's your pullback, and now you've had your doji, bullish confirmation, and today it closed above the T line. You can still be buying this one with the anticipation that if this moved from 7 to 16, 11 points, this could pretty close to take you up to $25. UBNT had a good chart in the sense that it had this like a J-hook pattern. And how did the J-hook pattern start? With this flutter kicker signal. So we know this signal is a very strong signal, which would have further buying. And if there was further buying, that would kind of confirm that we're going to be breaking out of our J-hook pattern resistance level, telling us that we're probably in wave 3. A flutter kicker signal is, let's see if I have a kicker signal in here. I don't see one. Kicker signal is when they open it and close it down here. The next day they open it and go positive. And they gap it at the previous day's open and go positive. Well, a flutter kicker signal is that instead of a big day here, you have a doji day. And we know what the rule of the doji is, that it's going to move in the direction of how they open it after a doji. So highly suspicious or highly anticipated is the fact that if the stochastics are curling back up and you have a doji gap up, remember, they gapped this up. Even though they did a doji, they gapped it up above the previous day's open. If they open up positive the next day, we know they should be moving a positive after a doji, which means we're going to have a positive day. If you took out this little doji, you basically have a kicker signal. And we know a kicker signal is the strongest reversal signal or the strongest signal. All right, let's see. That was on UBNT. So this one you can still be buying with the anticipation that if this moved from the 38 level to the 53 level, that's $15. They should be able to take this up to about the $65 level. All right, and NWBO had this nice breakout coming out of this big fry pan bottom, J-hook pattern. Now it's still holding above the T-line. If they open this one positive tomorrow, you can be a buyer because now you've got an inverted hammer sitting right here at the T-line. If they take it positive, the probabilities are pretty strong they are going to continue going positive, and that means we've got another J-hook pattern in progress. We recommended TNP because there was a kicker signal yesterday. I guess today they came out with earnings, but apparently had better prospects for the future. So there was the initial consolidation and then closing up here. Makes this very simple. If this opens positive, you want to be buying because that tells you the kicker signal is still in progress. And they took out a lot of consolidation or a lot of profit takers right here. Means you'll have another strong to the upside. Let's see. Marty, thank you. That was earnings. Okay. Yeah, okay. So they did it. Yeah, they announced the earnings. And I guess I didn't actually read it, but I guess the initial reaction was blah. And then after they thought about it for a little bit, they apparently liked it. OESX. Continue to hold this one. This is one of those where once they got up through the T or up through the 50, they just kind of lollygagged along here. But notice where we had the little morning star type signal. If I can make this big enough, we can notice it better. Pretty much right here where the T line and the 50 crossed, told us that the both of them were acting as support. I wouldn't be afraid to be buying this one on positive trading tomorrow because they could still take this up into the $8 level. That's a $2 on a $6.50 $1.50 out of 650 stock. I should be able to figure that out. That's a 25-30% return. And HIMX started kicking out the other day. It's pulled back, but notice what they couldn't do. They couldn't close it below the T line. This one you can still be buying on positive trading. Let's make this a little bit more pronounced. That tells you that this J-hook pattern is still in progress. As long as they stay above the T line, you want to stay with it. You're absolutely right. There's only about 70,000 shares traded in OESX. I didn't even notice that until now. Except the volume a few days back was up much higher. It just has gotten a little bit diminished here recently. SPNC, another one that we recommended today, based on this left-right combo right here at the breakout level. So essentially you got kind of a scoop pattern. This one you can still be buying on positive trading today, or tomorrow. Oh boy. Okay. Okay, everybody was playing plug. This is another example of if they're gapping it up and you're way up in the overbought condition and you've seen that they've taken it up exuberantly, if they're gapping it up and taking it up, put your stop right here. If there's not enough time for that, make sure you put your stop at the previous day's close, because if they come down through there, that tells you that's where the energy is going, is in that direction. You want to take your profits as fast as possible. Right now, it looked like it started to pop back up, but remember, this is not a signal right here. That was just an up day, so you had to see better confirmation, which hasn't occurred. I think Ballard Power, same scenario. Ballard Power was even better as far as taking profits. With a gap up in the overbought condition, just put your stop at the previous day's close, or I'm sorry, put your stop at the open. If it comes down through there, you take your profits, because it's going to do some sort of candlestick reversal signal. Unless they take it down and then they start bringing it right back up through. Worst case scenarios, if you take your profits right here and they take it down and you can see there's a dark candle the whole way, if they turn it around and start bringing it back up, if they bring it back up through this level, at least you know which direction they're taking it. You can always buy back in. That means they've taken their profits. Now the buyers are stepping back in. Let's see. I bought puts then, but then was spooked out this morning. Oh, on Ballard or on Plug? On Plug, all right. Yeah, but notice what didn't happen. We had a market that was up 180 points today, and they were still selling this one off. That was Plug. All right, a few others that look good right now. GLNG. This one's got a nice J-hook pattern. This one you can be buying on positive trading. And once again, the J-hook is identified by the pullback, but notice the strength. And notice the pullback is indecisive, till you hit the long-legged doji and they start turning around. So you got a bunch of dojis in here on the pullback. So that should be a much more clear indication that when they're selling it, they're not selling it with any great enthusiasm. And OPK has been a good chart, and it's done a flutter kicker signal. Notice the dark day, then they gapped it up and did a doji, opened up positive today, and when they opened up positive today, what did that tell us? They were going positive, and where were they going positive? Right here at this breakout area. That tells me we're in wave 3, and not only are we in wave 3, but it started out with a flutter kicker, which is a very strong signal. GGAL, wouldn't be afraid to be getting back into this one. You had your doji sandwich creating this J-hook type pattern. Wouldn't be afraid to be buying this one using the T-line as your stop. Now CBAC, same scenario. And notice how wave 3 is starting on this one. with a doji gap up. So you've got the classic, which is your fry pan bottom, strong price move. Pull back, look for the next wave up. AMRI, fry pan bottom, strong price move. Pull back, look for your next wave up. So again, patterns are going to give you a lot higher perspective of what's going on in investor sentiment, and they're going to give you a lot bigger profit potential. Now, IG, unlike Plug and Ballard, is still in this fry pan bottom J-hook pattern. You can stay long on this one as long as it doesn't close back below the T-line. SEM was one we were in earlier. Well, what was I looking at? No, okay. What I was looking at is this one's setting up. That if this, I'd put a buy stop at 12. If it comes up through there, that tells you this J-hook pattern is going to be in progress. RL. YP. This one looked better earlier today. Again, there's your kind of your slow curve setup. Maybe I got this too big. You're probably going to pop this one back up to the top of this channel, which means you should be heading up here to about the $52 area. And let's see. Oh, a lot of people watching YOD. That's a nice breakout of this downtrending channel. Notice your little doji move up. This one can probably be bought. Worst case scenario, it's going to hit this resistance level, which means it's taking you up into somewhere up in this area. PRKR, another cup and handle, breaking out. This one you can still be buying. And let's make this a little bit smaller. So this one has the potential, if it gets this slingshot effect, back up to the top of the trading range. Slow curve, Lisa, is, yeah, it can be a rounding bottom. People ask, what's the difference between a fry pan bottom and a slow curve? Usually a fry pan bottom is going to be a bigger, longer, at the bottom of a trend, even though this is up at the top part of the trend. Whereas a slow curve is usually going to be a much faster. What were we doing on a slow curve? OCLS. Yeah, much faster, pronounced slow curve, and it's usually in the uptrend. Just kind of a when is the best time to get in a cup and handle as it's just breaking out through the top. Best time to get into a slow curve is just as it's breaking out. So not only does it give you a visual alert of when things might be exploding, it allows you to pick where would be the right appropriate time to get in so you're not sitting there waiting for days or weeks waiting for it. Let's see. I watched your video on J-hook several times and still don't quite understand it. Okay, we'll get a J-hook in here. J-hook is this little hook right here. And the prerequisite for a J-hook is a very strong price move. So what's the investor sentiment here? But they really want in this position. And they're buying like crazy. Then you get your profit taking, and you can tell it's profit taking versus a reversal because your trading here becomes very indecisive. It's not a solid pullback like it was a solid uptrend. Then when that reversal starts showing that the buying is stepping back in, that the selling has stopped, That tells you the profit taking's over. Now we're ready for the J hook into wave 3. Does that make it any better, Money Grove? Essentially what it boils down to, it's a wave 1, wave 2, wave 3. But we can see whether this is a pullback versus a reversal based on the nature of the signals that are in there. A lot of people following DDD. Looks like it's trying to bottom right at the same place it bottomed before. This one you get ready to buy once it comes up through the T-line. But also, notice what this one did. Came down, gapped down through the 50. Told you there was no support there. Where did they go to? Down to the 200. The buying started, and where did it go to? Right smack dab up to the 50. And what type of signal did it do? A doji. So once we see that doji, you should probably be taking at least half your position off, because two things are going to happen here. One, if they go up through, you can always buy back. Two, if they open lower, you close out the position completely, because that confirmed that that was the resistance level. Then once they did that, notice where they took it back to, right about the 200 or the same level it took it to before. Now you see whether they bring it back up. This time it may only come up here to the 50. Wave 3 has a good chance of matching wave 1. Wave 2 is the pullback. Yes. All right, let me see. AER was one that had the potential of a fry pan bottom breakout, but this is why you want to see what the T-line is telling you. This basically told us that the potential of this breaking out and going up into a wave 3, let me make this smaller, like this, disappeared when they closed it back below the T-line. Now, is this out of the picture? No, because notice how flat this is. If they bring this back up, you probably have that slingshot effect on the scoop pattern, which could get you in a very strong price move. And MAC, a lot of people have been asking about MAC, but MAC's kind of going dead here. So what you're probably looking at on this type of pattern is a flat, a pop-up, a flat, pop-up. So at this point, if you own it and it doesn't act real strong tomorrow, like coming up through this level, you close it out. Then all you have to do is put a buy stop right up here. That way, if it goes flat for another 2 weeks, you're not sitting here with it, but you're using your money, and if it does come up through there, you're pop back in knowing that you're in a good, strong price move. Now, WBMD wanted to show this because this is a perfect illustration. No, not this again. Okay, smoke them if you got them. We're gonna. Okay, what makes this do this? Just about this time of night, every night. It'll come back. There we go. This is a perfect illustration of when you see that doji spinning top gap down through the T-line, very little probability it's going to come back, especially if you've just climbed up into the overbought condition. Get out of it immediately. I know it hurts, but you're better off getting it out there right as it's gapping down and opening than holding on to it. And I say holding on to it because what's our natural reaction? I'm saying what is my natural reaction is that, man, I'm making a profit. It gaps down. What if they brought it back up? I can get out at a better price. Oh man, I should have gotten out yesterday. If I get out now, what if they pop it back up? And I just keep holding on to it until I finally say they're not taking it back up. So I've learned if this is moved up like that, if they gap it down below the previous day's open, especially when your stochastics are up closer to the overbought area, that's not what should be happening in an uptrend. They've changed their mind and they're going to take it down. CDTI. This is your fry pan bottom. This is I've just put out a video again for the people that bought the T-line package, showing how to use the fry pan bottom with the T-line. And there's going to be sometimes where you get a whipsaw at the end of the fry pan bottom. This is where the enthusiasm, both bullish and bearish, start kicking in. But if you close it out here, don't be afraid to be buying it back on a big gap up, because that's where the big reaction occurs. And when they gap it up out of this fry pan bottom, even though it closed below the T-line, what's it telling you? It's basically telling you still you've got a fry pan bottom breakout. The possibility or the probability is that you're going to go much higher. And that same type of thing, I think, happened to Moby. Yeah, where they had a fry pan bottom. In this case, they didn't get it back below the T-line. So this one now is a good buy because you got your fry pan bottom, strong price move, pull right back to the T-line, left, right, or combo, or a bullish engulfing. This is still going higher. This one, if you're buying, you can still buy, and just don't let it close below the T-line. And Kendai had a question on, if you closed out Kendai over the last couple of days, how could you prepared for this type of move? And the answer is you can't. There's going to be times when the chart tells you to get out, and there's times it tells you when they've gapped it back up, it's time to get back in, or it may still be time to get back in, because we're still coming out of this fry pan bottom J-hook pattern. So there's a lot of times, say a lot of times, there's a good number of times where I get stopped out of a position, and then 4 days later it's time to get back in. What's our biggest fear? I keep saying what's our biggest fear. What was my biggest fear? That I'd be buying or selling here, taking my profit, and then all of a sudden buying back when it's still going up without me, and I'm jumping back in a panic, and it turns right around and I give back some more of my profits. But now that candlesticks came along, this tells me a completely different story. I'm not jumping back in just because I think it's going up without me. I'm jumping back in because the chart pattern tells me they haven't finished this uptrend. I want to be back in that trade. Okay, let's see. How much time? I've already... Okay, so a few shorts. Still short CONN. Because there's the dumpling top, and notice what it did today. With a 200 point or 180 points move to the upside, they're still selling this one off. And GTN, wanted to show this as an example of the blue ice failure, where they've fallen down through the ice. There's your Morningstar signal. Told you you're heading back up. Where were they going to? Back up to the 50. Then what do we have at the 50? This is why you want to know what your signals are telling you and where your stochastics are. We get to the 50. We have an indecisive trading day. The next day they take it back down. That pretty much confirms that they're not going through the 50. They've done an evening star signal, and they're closing below the T-line. If you bought, you close it out, and you get ready to go short. This chart had everything to tell us exactly the time to go short, which is right in here, and confirmed with a doji sandwich to the downside. Now we've had another doji sandwich gap down. Stochastic still heading down. Is it going to hold here at the 200? All indications are that it's not, because we've still got more downside in the stochastics, and they did a doji sandwich again, failing at the T-line. That pretty much tells us there's a lot of force yet to the downside on this one. NSR was one that we had gone short, and it's popped back up a little bit, but it hasn't done a reversal signal. If we make this big enough, there we go, we can see this is just an up day and a downtrend. They could possibly bring it back up to the T-line, but the fact that this is not a reversal signal tells me there's probably maybe a bounce versus a reversal in this one. This session is recorded. All our sessions on Monday and Thursday nights are recorded. Wind is another example of a good short. And today, even though it was trading positive, it wasn't doing so in a relatively strong manner like the rest of the chart. And our stochastics aren't near the oversold area yet. So this would just give me the kind of the impression that we're just kind of in this downward trend channel. You can still be shorting this one if it opens lower tomorrow. This just tells me that this indecisive up day was an indecisive up day. And AGI. AGI, can kind of tell we have a trend channel going here. When it got to the top of the trend channel, we got an evening star signal. This kind of implies, especially right here at the 50, there's going to be some more downside. This could come all the way down to the bottom of the trend channel, bringing you from the $10 range down to maybe the $6 area. So that'd be a good percentage move to the downside. Now, this is one of the gold stocks. So, as I say, gold didn't seem to have any real dramatic selling going on today, but a lot of the gold stocks were selling off pretty hard. TRTA, this one, get ready to go short. And this is going to kind of lead into how do we tell when a stock's starting to turn over? Because we're starting to see sell signals. Not sell signals per se, but notice that we're starting seeing a lot of selling. And then today we had kind of a left-right combo that closed below the T-line. So the whole trajectory as well as the nature of each candle is starting to show negative. And then with the close below the T-line, looks like they could bring it back. Where? They could bring it all the way back down to the 50 and or, which would almost equate to this little trend channel. And FIX, this is, again, observe the obvious. The obvious is when they come up to a resistance level, they fail. Come down, come up to a resistance level, they keep failing. That tells me if this is wave one, wave three could be fairly substantial to the downside. Can you discuss indexes changing directions, how we transaction our portfolios? Certainly, I'll get that. Monthly has been straight up. On PRTA, that's the weekly. Yeah, but what's happening on the monthly? What are the elements that tell us that it's time to start looking to take profits? Well, this is a little bit longer term, but remember, the further away you move from the T-line, the higher the probability they're going to come back and test it. So that now we've got a shooting star in the making. If they start trading this lower on the monthly, that means we're going to be in a downtrend for at least quite a few weeks. That tells me they could be bringing this all the way back down, let's say into this level over the next 2 or 3 weeks, which would confirm the shooting star in the monthly chart. Let's see, did I do fix in GNC? GNC, this is again where you observe the obvious. The obvious is this is a downtrending stock. Fell through the 200, came back and failed. Notice how it came back up, and this time the 20 failed, and now it's had a slow curve rollover here at the T-line with a gap down. That pretty much tells me you could probably draw a trend line down through here, and it may be on its way to that level. So this one would be a definite short tomorrow on weakness. Notice your stochastics are still heading down, and they've gapped it down from the T-line area. If they break through this level, that means your next line of support is way down here someplace, probably in the maybe in the 20 area. All right, so somebody wanted me to kind of show how do we convert our market or our portfolio. First of all, if we're getting up here and we start seeing sell signals. Now, up to this point, we really hadn't seen any confirmed sell signals. We had a down day closing below the T line, but it didn't confirm that day because I think that same day it had opened lower and traded back up to the T line. So it showed that there wasn't mass selling going on in the market. Bill, you want to use a combination of your weekly and your monthly. So right now, yeah, we're, as I mentioned earlier, we're long forward, long term, and we'll start adding more to it as the charts start to improve. But that wasn't a confirming day that day. Even though this day was a down day, the NASDAQ opened lower, traded higher, which essentially told us they weren't selling out of the market. They were just kind of shifting funds around. But then notice what we had up here. It started getting a little bit indecisive. Over here we had indecisive, and over here, but we didn't have a confirmed sell signal until we got to our hanging man, and they sold it lower. That was a confirmed sell signal. But what was the last criteria that needed to be taken care of? With stochastics rolling over, is they closed below the T line. And there was kind of a little bit of foolery here. On this day, they took it up pretty quick, but we had already started rolling over. So that's, if you remember what I said in the morning comments, that even though it's up, if it comes back down through this level, start unloading long positions because that means they're going to be taking this lower. Right now, I still think we're in a downtrend. I wouldn't put my butt down too heavy in the chair just yet. If this opens lower tomorrow, they're going to be taking this market down further. So if we can start seeing that this is starting to roll over, and we've got individual stocks that we've got long positions, we're taking profits, then you start saying, all right, I'm up here, I'm starting to see a little bit of potential sell signals. I've got 9 longs and 1 short on. I'm selling 1 or 2 longs today. I'm going to add those just buy some short positions to heft up my portfolio. So at the end of the day, I might be 7 and 3. And then the next day, with it selling off, I might be out of 2 or 3 more of the long positions and picking up 1 or 2 more short positions. So where was I buying shorts? On this day, on the date right here, we started putting out some short recommendations as well as long recommendations. So this is where we started doing not changing the whole portfolio over completely, but adding some more short positions to the portfolio. All right, so if you start seeing the market roll over, what did I just do here? What do you start looking for? Oh, we looked at the example just a second ago on PRTA. We're starting to see selling, not necessarily sell signals. This isn't a sell signal. This isn't a sell signal. It's just now we're starting to see some selling up here. Now they've got a bearish engulfing signal to close below the T line. This was kind of warning that it was time to start lightening up on a position and get ready to go short if it started trading back below the T line. Tesla, I think, is a good example. Where do most people buy? They buy exuberantly at the top. So if you're in the overbought condition and you're seeing them gap up, start watching for your sell signals. This is where, and as you can see, every time they opened it, they kept trading it lower, opening it, trading lower. Finally, with a gap down below the T line, this was all telling you it's probably time to start taking some off the table. This one confirmed that we're now on a downtrend. So let the candles tell you what's happening. Again, if they open higher and they're trading off by the end of the day, that's starting to show some weakness versus any strength. Have you done any recommendations for credit spreads this week? I haven't. Only because with the market whipsawing like it did today, I would have probably put more credit spreads on short positions, and today wasn't conducive for doing that. So, yeah, there weren't any credit spreads put out today. Do you look at the futures for the indices before the open to help decide whether to focus on long or shorts? Yes. So if we're sitting here right now with the market right here at the T line, what do we want to see tomorrow to confirm that they're going through? Obviously, we want to see that the futures are trading stronger. If the futures are trading weaker, that's kind of still confirming that they haven't been able to get it up through the T line. We're probably still in a downtrend. And there's a lot of times, I say a lot of times, there's quite a few times, like right on a day like this, where what the pre-market futures tell us the next day tell us whether they're breaking through or whether they've resisted and heading down. And if we see that we wake up and the pre-market futures are strong on that day, that means we can still be buying versus going short. So the pre-market futures, yes, I use that as a indication of whether it's confirming a signal or not. So if we've got a indecisive day right now on the NASDAQ with the Dow sitting right on the T line, it makes this much simpler. If they open this lower, what's it tell us about yesterday's trading or today's trading? That they failed up here, but they're still in a downtrend. On the other hand, if we wake up and the futures are pretty strong, that means the Dow is going up through the T line and the NASDAQ's going to make another attempt at it. Kevin, I weigh them all the same. The only reason I use the Dow is because that's the one most everybody watches. And that's where you're going to get your big money sentiment. Whereas, obviously, the S&P is a much broader scale, but it doesn't take us. I mean, I can analyze, you can analyze what the markets are doing in about this amount of time. If you pull up your NASDAQ chart and say, oh, it looks iffy, stochastic's still heading down, we need to see positive trading. The Dow, whoops, closed right here on the T line, stochastic's indecisive. We'll pretty much know what they're going to do with it based on the open. Same thing with the S&P, sitting right here on the T line. Should be positive because we had an inverted hammer gap up, but we still have to break this downtrending channel. So how they open it tomorrow will be important. So that's about as much time as you should be able to take on analyzing what the market is telling us it's trying to do. And right now, it's telling us that how they open it tomorrow will be very important because we're fiddling right around the T line. A positive open tells me they're going to be taking it up. A negative open tells me that they've failed at the T line. We're still going down. And again, that analysis, once you understand what the signals are telling you and what your confirming indicators are telling you, yeah, you can analyze which way the market trend is going with relatively good accuracy. Could those be J-hooks on the indices? Yes, they could if they trade them positive. Now, on the S&P, definitely have to get through this downtrending channel to tell us that the bulls have taken control. And probably the Dow, pretty much the same thing. Got a little downtrending channel. They need to get up through that level to tell you that downtrending channel is not the predominant factor at this point. Let's see, things like BCRX. If you start seeing selling up here, and you can analyze that it's going on at the same level it did before, that's pretty good evidence that that's where everybody's selling again. So that gives you kind of that toppy indication that they can't get up through to a new high. If they fail here, that means they're going down. That means everybody sees that it fails and they want to get back out of it. Apple was a very simple analysis. We started seeing a sell signal, indecisive trading right here at this level. At this level. I mean, everybody can see there is a downtrending resistance level at this point. And we can see immediately what's going on at those levels with indecisive trading, bullish day. If this was breaking out to the upside, it should be a good, strong day telling us it doesn't care about this downtrending channel anymore. The fact that they did a bearish engulfing signal, number one, is a sell signal. Number two, it's right here at the 50-day moving average, and they closed below the T line. And three, they did it right at the same level as this resistance level. This is, again, as many pieces of evidence you can see something starting to top out, the better off your decision is going to be. Oh, let's see. BWEN. Hanging Man, Doji, bearish engulfing. Yeah, this is where you start, when you start seeing a bunch of sell signals, that tells you you're probably topping out. And TGTX, getting that same condition. We haven't closed below the T line, but we've had a gap up, we've had a shooting star, we've had a doji, we've had a shooting star. This pretty much tells me if they open this lower tomorrow, close out the position immediately. It means it's probably rolling over. What we need to see is it open higher and start trading higher and getting away from the T line. TKMR was a good example that after a good strong uptrend, you take profits when they gap up in an overbought condition and do a doji because they're bringing it back. Now, this one had a huge move back to the upside. So if you jump back in it, that was the right thing to do. But then notice what happened up here again. We had a hanging man, bearish engulfing, and now a doji sandwich. It's time, if more than likely, if you didn't stop out here and didn't stop out here, you definitely should have been out here because that would have pretty much told you you've now got a bearish engulfing signal going on after a hanging man signal. NLNK is another example of when you start moving further away from the T line and you start seeing indecisive trading, you should have a strong expectation that they're going to bring it back down to the T line. And if they do, what's that going to do as far as a signal? Now you've got an evening star signal. The worst case scenario is you get out right here at the lows of these days, so your dojis. You can always get back in on a buy signal back at the T line. In this case, you didn't get it. This case was more that if they closed it below the T line, you could be going short, or you could be shorting it when they gapped it down through kind of this little support level. SBGI had an interesting chart. Same scenario. Came down, could not get back up through the 200, and we started seeing sell signals. It was time to go short. So this is where, if it looks toppy, meaning your stochastic getting up toward the overbought area and it's not showing any real strong buy signals, and you're starting to see sell signals at a resistance level, just kind of assume that's going to be continuing that downtrend. Oh, just a couple more, and then we'll start taking questions. WUBA, even though there was no inkling of selling, here was a selling day. It wasn't a reversal day. Then we had a shooting star type day. Then they took it back up. That told me if they were opening positive and trading positive, I want to be back in it. but the next day they do a bearish engulfing signal. Does one bearish engulfing signal tell you it's time to get out? Well, in this case, with a close below the T line, and you can see there's selling already starting up here. This was just putting the nail in the coffin that the sellers are starting to take control. So if you see a sell signal and you've seen others selling right before it, that usually confirms that that one's rolling over. Let's see. ORMT. That one was just kind of telling us that if you start seeing a slow curve, that's telling you to start watching to get out or going short. Slow curve, whether it's bullish or bearish, are usually very good indicators that there's going to be a blast one way or the other. If you've got a good uptrend and you start seeing indecisive trading, you at least logically can anticipate they're going to bring it back to the T or to the 50 to see if it's going to act as support. So if that's the case, and you start seeing it roll over up here, and your stochastics start turning down, at least you know they're probably coming back. Take your profits. You can always buy back if it supports on the T line. Okay, I guess that's about all I got for tonight. Is there any questions on candlesticks? On an intraday move down below the T line, should we sell or wait for the close and risk a larger loss? See Facebook. All right, the answer to that is it depends what the trend is doing and what the market is doing. So if this was a day where it didn't close below the T line, it didn't close below the T line, here, I don't know how early it got down there, but if you can start seeing that, I'd still wait until the end of the day because, well, not on this chart. There's a lot of times where the charts will come down below the T line and back up, below the T line and back up. Remember, we're not trying to sell at the absolute top or buy at the absolute bottom. We're trying to get that fat part where the high probability is. So if you give back a little bit, my feeling is if it's down already on the day, unless they're really pulling the plug and blasting it to the downside, which you don't see all that often, I'd rather sit there and wait to see what it does by the end of the day because at worst, I'm going to sell it at the same level at the end of the day, showing that it's actually staying down there than anticipating whether it is or not. Because quite often, not quite often, but just as often as not, you'll get a day like this where they've taken it down below the T line and then turn right around and take it right back up. So until they actually close it down here, if it's getting 15 minutes before the close and they're not bringing it back up, and then you close it out. Light green line is a 3 EMA, which is a faster indicator that tell you the further away you get from the T line, then you start using a 3T. And we'll do a session on that some night. Oh, let's see. What else do we have here? Can you perform a sector analysis like you talked about in TC 2000? Yeah, very simple. Let me see if I can do this with any grace. Okay, we can see this over here. We go to our trading lists. You'll just have to take my word for it. These are stocks, indexes, market indicators, word market indicators, flagged items, or Morningstar industry groups. So if I click on that and I want to do the same analysis, which ones had the biggest percent move? Well, right now on the downside, gold, silver, let's see, I could probably, silver, drug-related products, movie production, they all were starting to show strong sell signals. On the other side, if I flip this little arrow, I'm going to be going up to the top where it shows me which ones had the biggest percent moves to the upside. This one was processing systems, long distance carriers, appliances. Now let's say, let's find one, computer-based systems. Let's say that looks pretty good. Well, now all I have to do is come over here and click on one of these, say change my to my sub list. All right, now my sub list, one is Ruckus. And I can go down and say, all right, this is Lexmark. This one has a good looking chart. I flag it. This one's getting set up. I might flag it. This one not so good. This one not so good. But now I've got a couple on here by being the strongest one in the sector, showing a good reversal. And I can go back and put this on my watch list and say, this one I'll take a look at later. So yes, very easy to use the any of your scanning charts to scan for the sectors just as well as the individual stocks. Please verify wave form. I keep it very simple. Let's see, think of one. If I can see a wave, it may not, if I'm in it, I know I'm in an uptrend. If I see this pullback, then I can anticipate, well, this might be a wave one, this might be a wave two if they get wave three started. And if they do, I've got wave one, wave two, wave three. Now, do I care about wave 4, 5, ABC retracement? Definitely not, because I'm not going to be in the trade that long. Being a swing trader, I'm more interested in what's going to happen on this move. And when this move is over, I've probably moved on to something else. So wave 1, wave 2, wave 3 is usually equivalent to wave 1. We'll do a 3T session here pretty soon. We've just got where I'm still doing a lot of the videos on it. We've just got the fry pan bottom confirming with the T-line, and hopefully in the next few nights I will have the slow curve confirming with the T-line. The slow curve, everybody should learn, because those are the strongest, fastest, high potential trades that you have that you got out there. So when a slow curve breakout does occur, it's usually a very strong move. What charting platform do I use? The one we're looking at right now is CQG, but it's not what I would recommend for traders. It's the best one out there. It's the grandfather, and it's usually they use the feed off of this service for a lot of the other charting services. It's just about $1,000 a month though, and but it's got good graphics. I use it for writing articles or doing videos and that sort of thing. Will you do a session on watch list criteria? I have a huge list of stocks, and not S. Okay. Of stocks and knots. All right. Let's see. When you look at BDD Head and Shoulders, let's take a gander here. Yes. You've got the potential of a Head and Shoulders, but now you have to see whether they're going to break this level. That obviously would tell you that you're in a strong downtrend. But right now, what the stochastics and what the signals are telling us that they may be bottoming at this level. So you don't use, I don't use the indicators Head and Shoulders as a trading indicator. I use it as something to watch out to see what everybody else is watching. Is there a slow curve scan available? I don't know, Ed C. Basically, it's the fry pan bottom, but with a much faster duration. I'll have to ask me again when we're in the chat room. I'll track that down. I'll see if Ed C's got one. Not sure which one to get on the watch list. How many should be on the watch list every day? Money Grove, my watch list varies every day. Each day I add some to it, and I take the ones that aren't working off. So there are days when you can find 60 good stocks to trade. So then it's a process of which ones are the best one or two. There's other days where you only maybe find 7 stocks that look good to trade the next day. Okay, all right, Jim, let's go ahead and do the double line. And Jim, let's go ahead and do the second double line. All right. Okay, thank you, JJ. New skin. New skin, I wouldn't be long or short. This one's going to move sideways, waiting for the 50 to catch up to it. SSRI. You've got a shooting star variation golfing, which is more substantial of a sell signal than what we've seen here in a while. So I'd be awfully careful at this point. But notice it did close above the 3T line, so that means it's still got good strength in it, but we just now have to be weary of it at least coming back to the T line and then making sure it stays up above that level. That's still scrolling past me here. That was SSRI. GoGo. GoGo, I was having a hard time getting started. It's got kind of a stutter step. I still wouldn't do anything. Now, if you own this, this is, again, where you started seeing the selling that told you they're probably bringing it back down to the 50. So you want to take your profits in here and then just wait for it to get to the 50. Now I wouldn't buy it until it does close back up above the T line. Sienna. Sienna, this is not a good looking chart either. It's sideways. I'd be trading something else. As you can see, it hasn't moved. It's popped up, came right back into the trend. I'd be trading something else at this point. And GDP, another one that's sideways. Let's see, make this a little bit bigger, maybe even potentially going short. This might be, I'd be ready to go short if it came back down through the 14 level. It tells me that this is, we're getting a lot of sell signals right in here with stochastic starting to roll over. YY. YY. Another one that looks like it's having a little bit of trouble here. It's trying to do a cup and handle. I wouldn't want to be buying it until you can see the trajectory is actually starting to turn back up. I don't know where this thing came from. DWEN. Right now, you shouldn't be in this one. After you saw the Hanging Man Doji, left-right combo, gap down, it should have been closed out. It's trying to do a cup and handle, but you don't do anything with this until you see at least come back up above the T line. Code's got the Doji gap up. This one still got more upside to it. And Keg. Oops. This one you get ready to buy. Not just yet, but if it closes back up above the T line, yes, you've got your tweezer bottom right here, smack dab on the 50. Doji gap up. If they confirm with the close above the T line, you could be buying this one. And PES. That's a nice, Very nice J-hook pattern. A J-hook pattern, again, is your strong uptrend, pull back. Now you can see the curve, and they're starting it back up. That one you'll probably see on the recommended list tomorrow. Oops, it scrolled past me again. DHRM came back up again. This one you can be buying on positive trading. You just want to make sure it gets through this top part of the wedge pretty quick. Mercy. Now. Okay, and WWAV. Get ready to be buying this one. It's still in this upward trend trajectory. Look for it to go to the top of the trend. And RGSE. This one you want to get ready to buy. That looks like the consolidation's over. Get ready to buy this one on positive trading. And OPTT. This one you should be out of. You had a huge shooting star, which was not a good sign. It needed to open positive and trade positive. But bearish engulfing said that the sellers are still here. You're back below the T line. As a matter of fact, you've now got kind of a bearish scoop pattern. Look for it. Kevin, yes, we can do that. But that's pretty much very simple. When a pullback is a selling pullback or a reversal of the selling pullback, a pullback is where you see indecisive trading on the way back. Ren, not back in this one yet till it closes above the T line and confirms. MM. This one you can be buying. I would probably at this point want to see it come back up through this level, especially come up through the 200. So I'd rather pay $7.50 for it, knowing that it got through here. It looks like it should, but you're running out of steam on your stochastic, so you definitely have to watch to see what it does at the 200. BTSS, stay long. There's that slow curve that broke you out through this wedge. You stay long on this one until you see a sell signal. And notice the little trend kicker. I told you there's still a lot of strength in this one. JCPenney. You stay with this as long as it stays above the T line. That's probably a very good long-term hold. NBS, stay with it as long as it stays above the T line. AXU. Another little scoop type pattern or a breakout of this downtrend. This one you can be buying on positive trading. And NRZ. Oh, stay long. You've got a fry pan bottom, and you're probably going to come back up and fill this gap. So stay long as it stays above. EXP. This one you get ready to buy on positive trading. This is your indecisive trading down here. Now they're staying up above the T line. And PNC. Another one that you can be buying. Just be aware of the lack of magnitude of return in this one. You don't have a whole lot of volatility or price move. MGM. Whoops. MGM should be at the bottom of the trend channel. I wouldn't buy it, though, until it does close above the T line. GM, without the M. This one you stay short until you see a buy signal and a close back up above the T line. TCK, whoops, S.TCK. Another one where you don't want to be buying this one or covering your short position until it does close above the T line. And CLF. CLF just got up with kind of a flutter kicker type signal. This one you definitely can be buying on positive trading, but anticipate your first target will be the 50-day moving average. Where did I go? ARIA. Let's make this one bigger. This one hasn't been very impressive recently. Maybe it looks a little bit better. Still not very impressive. I think there's better places to have your money right now. Just no direction on it. CCRN. No. Pshaw. Well. Okay, let's see. Camp is showing a bullish engulfing after inverted hammer, but stochastics are heading down. Oops, there we go on. See, this one you stay out of unless you're short until it closes back up above the T lines. Camp. Let's see. I'm just showing that this is kind of in a slow, steady uptrend, and it's been slow. I would probably be trading something else other than this one, only because of the lack of volatility in the price. AVG, stay long as it stays above the T line. Tango. This one, to stay in it, needs to open positive. If it opens lower, you close it back out. That means they've failed here at the T line. Kroger. It's got that slow curve in it, but again, beware of Kroger. This is your classic fry pan bottom strong price move, J-hook pattern strong price move. Just be kind of the percent move on Kroger, because of it being an institutional trader, is a little bit sluggish. Walgreens, I wouldn't be long or short this one because it also has such low volatility. If you're holding this one, you better be holding it for 2 years down the road. Let's see, did we do TSO? This one you should be out of and get ready to go short. A lot of the oils got hit today for some reason. APC, S.APC. Well. This one is trying to stay right here on the 50. I wouldn't do anything with it until it closes above the T line, and then once again, you don't have a real big volatility move in this one. I would probably be trading something else. SWC, big bearish engulfing signal. Makes this very simple. To stay in this one, it better open tomorrow positive and trade positive. If it trades low or below the T line, you close it out. BMY, Bristol Myers, another one that I probably wouldn't be long or short. Doesn't have any real direction. And the magnitude of the direction is not very good. Let's see, B or CBMX. A nice little fry pan bottom breakout. This one you can be buying. That's attractive. And BRIA. BRKS. BRKS, all you can do right now is stay long as it stays above the T line. RGLD has been on a good uptrending stock, but backed off for the last couple of days, but still hasn't closed below the T line, so you stay with it. And RIG, if you're short, you stay short, but you've done a doji today. This one, if it opens positive tomorrow and trades positive, you close it out. You can always reshort it if it fails at the T line. Diamond Offshore, stay short until you see a buy signal. And DBRY is one that we've recommended a short on, and you stay short on this one as long as it stays below the T line. Smith & Wesson. Right now it's gone flat, but if you hold it, keep it as long as it doesn't close below the T line, but it better pop to the upside very quickly. MTDR, this one you can buy on positive trading. You have kind of a doji sandwich setup. Positive trading would put you more on a J-hook pattern. And Plow, just stay long. And notice how this one started with kind of the island reversal down here, where they gapped it down, traded 4 or 5 days, gapped it back up. Hasn't been able to close below the T line all the way up. At this point, I'd have my stop at today's open. It shouldn't come back down through that level. And the reason that you have it there is because you've gapped up in the overbought condition. Noel, you just stay short. Nothing there at all. And QCOM, you get ready to buy this one on a little kicker type signal today, morning star type signal, scoop type pattern. If it opens positive, that means they've broken out, it's going higher. And SWIR, doji right on the resistance level. Another one that's very easy. If it opens positive, you buy immediately because your doji sandwich will take you up into the next level. Oh, stay long. I think that's got a 5% dividend yield. NEO, you don't do anything with this one until it does close above the T line. And FTEK, nothing here. Wouldn't be long or short this one. It's sitting on the bottom of the trend channel. Stochastic still heading down. There wouldn't be any reason to own this one right now. Gold inverse. Yeah, stay. Well, this one, if it comes back up above the T line, you want to be buying, which tells you gold is on its way down. Let's see, we did Joe already. That's the coffee ETF. You want to be short that. IDTI, nice little J-hook type pattern. This one you can be buying on positive trading. IDTI, another one that you can be buying. Let's see, CY. S.CY. This one I'd be more interested in buying if it gets up above the 200, but another one that you have to be very careful about the lack of magnitude and price move. PWRD stays short, probably heading toward the 50. And Bank of America. Bank of America, I don't think I'd be long or short this one right now. No direction to it. UNG, natural gas. This one's got the little scoop pattern, but to get into it, it definitely needs to open positive tomorrow. CLNT is having a hard time getting started. It needs to see some positive trading and getting back up above the T line before going into it heavily. CMI, a little kicker type signal, Morningstar signal. This one you can be buying on positive trading. And that's it. See, we have CMA. CMA coming back up above the T line. This one's still in a slow uptrend. CYTR. This one you stay short until you see a buy signal and a close above the T line. Right now, there's still no tremendous buying force in this one. And Boeing, I wouldn't be long or short. You've got a little scoop type pattern, but even if it moves back up to the 50, you're not going to have a very big percent move. Amazon, all you can do with this one is stay long as it stays above the T line. And Goldman right now, I wouldn't be long or short. There's no direction to it. Best you're in this very, very slow uptrend. Okay. Well, let's call it a night there. Yeah, I'm running out of steam. Okay, so let's call it a night. I've got to go pick up Sandy at the airport here in a little bit. So we'll see everybody in. Option room people, we're going to have some option picks tonight. Don't get discouraged if you haven't seen some. The market really hasn't been conducive for getting into an option trade for a big time, but there's still a few good ones out there. All right, we'll see everybody in the chat rooms.